Purchasing ETFs is all the rage nowadays, but there are certain things you should know before you even consider buying an ETF. What are they? Well, we're going to go over that in this video. So lovingly, tenderly, gently, smash that like button for the YouTube algorithm, and let's dive in. By the way, you're watching Finance Squared. I'm your host, Derek West, and you clicked on this video because you're curious what things you should know before you plop down your hard-earned cash when buying an ETF. Well, I have 7 things that you should know, and let's dive right into them without any further ado, shall we? Well, the first thing that you should know before you invest in an ETF is, what are your expectations? That's right. What are you trying to get out of the investment in an ETF? A lot of people, when they first start out investing, have a vision of grandeur, shall we say. They envision parties on yachts with Caviar, driving 200 miles an hour in a Lambo, as they light a cigar with $1,000 bills. They also see themselves flying in private jets to tropical islands while they party it up with power influencers in business, politics, and sports. All this is possible with investments, even ETF investments. But when you really think about investing in said ETFs, well, the reality is that they're not all that sexy and really not all that powerful. They're actually some of the safer investment choices that you can make. Sure, there are flavors of ETF investment instruments out there that can liven up the party a little bit. More on that a little later in the video. But when it comes down to it, when you purchase an ETF, you're simply purchasing a basket of stocks. No more, no less. That basket of stocks is designed to track an index like the S&P 500 or Russell 2000, or perhaps an industry segment. Nevertheless, you're not wasting a ton of time looking up all the stocks in a particular index or market segment and then purchasing them one by one. ETFs are designed to save you money because after you spend a ton of time researching which stocks are in the index and you line them all up to purchase them, well, then comes the fees. And after a while, all those fees start to add up. ETFs short circuit all of that. Simply purchasing the ETF of an index that you are tracking or that you want to get into. You're essentially doing the same thing, but in a more efficient way. Of course, it's not the only way to do it. There are a couple other ways which I'll be going over in future videos. Which reminds me, don't forget to subscribe to the channel with post notifications turned on, the little bell, so you don't miss out on all the great videos that I do here. Nevertheless, ETFs are designed to save you time in other ways as well, which leads us to the next thing you need to know before buying an ETF. How much time do you have? So ETFs and other investment baskets, well, they save you time investing by doing most of the hard work for you. For example, when you purchase an ETF, you do not have to spend the time and effort of studying a stock's price history over time, its volatility, whether or not it's breaking out of certain patterns or going into other patterns. Studying those metrics and patterns can be a full-time job in and of itself, and anyone who has done that understands that it can be a major time sink. In fact, many a day trader spends his entire career studying all of those things and more, try and find the next breakout stock in a sea of many, many stocks. That kind of analysis, whether technical or fundamental, is key to really picking stocks well. I did a couple of videos on them. Feel free to check them out in the links above. But even with that, purchasing ETFs also means that you don't have to study the fundamentals of the underlying companies within the ETF. Things like their price to earning ratios, the company's revenue, the company's trailing quarterly earnings. That also can be a full-time job in and of itself. In fact, many investors, including famous ones like Warren Buffett, well, they made their fortunes doing just that. Those in the know call that discipline fundamental analysis. And those that can do it well can beat the market, just like Warren Buffett, which is a key point. Doing fundamental analysis and picking a couple of stocks that beat the market average is one of the ways that you can make a lot of money very quickly with the stock market. It's similar to technical analysis. It's another way that you can make a lot of money relatively quickly in the stock market, but you have to have different expectations about the type and amount of work and research and time that you will be conducting with both of those strategies. Not to mention, quite a bit of knowledge to gain proficiency is needed. Let's not forget that it also takes quite a bit of skill, and some will say intuition, if you're going to be truly a master of either of those advanced techniques. And all of those things take time to acquire. Time which ETF saves you in return for that amount of time and complexity ETFs save you. But as a trade-off, they're not as profitable. Another trade-off, they're a little bit safer for your average investor. So yeah, a great thing to know is how much time do you have and want to spend in your investing life. But that takes us to the next thing you need to know before you buy an ETF. The thing you need to know is, unless you're the best of the best, it's very hard to beat the market. Now, study after study has shown that most professional investors cannot, with a capital C, consistently beat the market. Some pros can beat the market for a quarter or two. Even fewer can beat the market for a year or more. Very few can consistently beat the market for a period of time longer than 5 years. Data from the S&P 500, also the Dow Jones indices, show 60% of large cap equity fund managers underperformed the S&P 500 in 2020, the 11th straight year that the majority of fund managers lost to the market. So at one point, they were winning, and remember that past performance is not indicative of future prospects. So it could be that this is the year that picking individual stocks will be in vogue again. Nevertheless, another key point, 60% underperformed. That means that 40% performed at par or better. So individual stock pickers exist who can beat the market. Don't let anybody tell you any different. If you know one, make them prove it, and then pay them whatever fees they're asking, because they're probably worth it. But for everyone else, set your expectations to earning about the 7 to 13% that the S&P 500 has averaged over the last 40 years. It is slow, but it is sure. Even then, investing in ETFs does not necessarily have to be vanilla if you have the stomach for more advanced trading strategies, and have set yourself up to have investing success by A, having an emergency fund, and B, having a large amount of your investments tied into safe indexed investments like index funds or ETFs that, let's say, track the S&P 500. Then you should be free to experiment with other investment vehicles, which takes us to the next thing you need to know before buying an ETF. What is your investment strategy? I talked about being invested in a broad market fund to help to steadily grow your wealth over time as an important piece to have a fundamentally sound investment future. But what else should you look for? Are you passionate about investing in a certain industry? Maybe you're convinced that green technology, batteries, electric vehicles, smart grids are the wave of the future, and you definitely want to be invested in them to be on the ground floor before they really grow. Well, there's an ETF for that. Maybe you're a tech advocate and are convinced that the FANG and companies like them will be the growth engine of the modern age and provide many an investor with a profoundly profitable future. Guess what? There's an ETF for that. Maybe you're just old school and you are really just looking to get into commodities because you feel they will provide a hedge against inflation. Wait, what's that? Oh, there's an ETF for that. There's an ETF for almost any investment strategy that you can come up with, including advanced ETF strategies like shorting industries or utilizing leverage. If you don't know what your strategy is, then now's the time to study up on the various strategies out there for ETF dominance. And we're here to help, and we will be having more videos on this particular topic in the very near future. So make sure you are subscribed and post notifications turned on. You don't want to miss a single one of those videos. But one important part about developing a strategy is to have a goal in mind, which takes us to the next thing to know. Knowing your investment goals will help you to pick the right ETF to help you get there. For example, if you want to get to Dubai, you know that a vehicle to get you there fast would be an airplane. If you know you can afford to take a long time to get there, you can take a cruise ship. If you live in New York City, here in the US, and you have a goal of being in LA, you can then pick a vehicle to get you either there fast or slow. It's the same with ETFs. There are different advantages and disadvantages of ETFs that manifest themselves when looking at your investment horizon. Basically, the time you're looking to bear fruit from your investing endeavors. So if you're looking to get into and out of an investment quickly, there's an ETF for that. If you have more of a long-term mindset, there's an ETF for that. Also, one of the advantages of ETFs over other investments, like their cousin, the index fund, is that they can be traded intraday, just like stocks that they hold, allowing for liquidity to help you get in and out of investments as fast as you please. Which brings us to the next thing you should know before buying an ETF. In other words, there are pros and cons to ETF ownership. Listen, everything that glitters is not gold, and no matter how nice it is, it's not 100% perfect, and that's true with stocks, crypto, index funds, and of course, ETFs. ETFs definitely have positives. For example, they have lower barriers to entry to get into them. With ETFs, usually there's no minimum amount required to begin investing. To get into ETFs, you just have to have enough money to purchase a single share. With ETFs, you're automatically diversified. I talked about that a little bit earlier, so I won't go into much more depth here, but when you buy an ETF and you're not tied to a single company's fortunes or even a single market cycle's fortunes, or even a single market segment's fortunes, ETFs are easy to buy and sell because they are traded on exchanges just like individual stocks. Again, I talked about that earlier, so no need to go into that in any more depth. Also, ETFs are tax efficient. You don't pay any taxes until you sell your ETFs at a profit. So if you have a buy and hold strategy for, let's say, retirement purposes, ETFs can make sense for you. But ETFs also have some trade-offs. In the past, ETFs have been known to have some fees associated to them. That's been disappearing in the industry nowadays, thanks to brokers competing with each other to get the average investor's business. But nevertheless, that has been a problem in the past, and it can be a problem in the future. ETFs have been known to be somewhat volatile. Listen, no investment instrument is immune from volatility. Some types see more volatility than others. For example, crypto is extremely volatile. Nevertheless, ETFs have been known to be among the more volatile of investment instruments out there. Now that said, ETFs are definitely less volatile than single stocks. And depending on your strategy, you can reduce your risk of experiencing volatility even further by purchasing shares in a broad-based index ETF such as an S&P 500 rather than focusing on a specific industry. We focus in on the finance industry and everything about it: stocks, bonds, index funds, ETFs, cryptos, REITs, and of course the strategies to be successful in each and every one of those areas and in your financial life in general. I know that sort of thing is up your alley, so become part of the tribe and subscribe with post notifications notifications turned on so you don't miss out on any videos when they're piping hot off the presses. Also, share with your friends and other finance enthusiasts, and drop us a comment on some of the things that you should know before buying an ETF. Let us know in the comments. And remember, a goal without a plan is a wish. A goal with a plan and no action is a wish list. Thanks a ton, guys, for watching the video. I'll catch you next time. Peace.